Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening as we're getting into the Labor Day holiday, but it is August 29th, 2024, and an interesting day today. You know, you're void of a lot of important news. I think the next big piece of news that is going to come out for everybody is going to be next Friday's jobs report, but we do get one of the Fed's favorite numbers, and that's coming out tomorrow, the PCE numbers, and I'll get to them in a minute. You have a mixed bag in the stock market. It was strong as can be for 90% of the day. In the last hour of trading, the S&P, along with the NASDAQ and the Dow, sank back rather sharply. And, you know, you gave up the lion chunk of the gain. The interesting part today was the markets broke away from NVIDIA in these indices, and I think that's important. Maybe what we now know is NVIDIA at a price earnings that it's got, the market is saying you're not going to be able to have dramatic earning jumps the way you did over the past 2 years. And now, yes, you're the bellwether for the market, but you're not the market. And I wouldn't be surprised if it loses weighting, in fact, in some of the indices. So be aware of that. It's called maturity, and it's not a bad thing. They beat on all the numbers, but they got to get their Blackwell product out. Okay. In the gold market, I still have the 2,600 level as a goal through here. Silver, as long as you don't get down under 29.50 and a half, if you do, could be going a bit lower through this. I wouldn't be surprised to see the dollar rally a bit more. A number of the currencies fall against it as we're into the end of the month, evening up and getting ready for the next cycle of trading as we get into the September timeframe. For most of us, the summer ends now. I know the seasonal summer's not here ending, but you know what I'm getting at. We're going back to work. The kids go back to school. The outdoor restaurants, it's not as crowded. The tourism starts dropping off rather dramatically everywhere, and people come back from vacations. It's a different world. On the energy markets, it's time that you move to the Brent. Got to do that in turn. I don't mean Brent, I mean November in the Brent. October goes off the board tomorrow, and I made the change in if you look at Bitcoin, I made the change there. So as you and I take a look at some of the markets on the weekly close only, you've come up, and I mentioned to you before, it acts like a double top is at hand right now. We'll see if that is in fact the case. Look at the craziness here, and I want to walk you to a pattern that you rarely see. I defy you to find it again. Let's come back right here. This is Tuesday. You get into Wednesday, you have an outside day down. You do see that. Now, today, you have an outside day up where the market comes back. Is it up or down? No, they're saying it's down. So you have two outside days to the downside, which is interesting as can be, and this is where you're at tonight. So I'm still going to say, when it's rare that you get this. And I'm not exactly certain how you should handle it. I would think if you clear these highs on a closing basis, you're moving to the upside. If you get under here on a closing basis, you're probably going to fall. Where to? Well, right now the swing line's pointing down. Therefore, it would probably be 55.36 could be the first objective there. And if it goes up, the 57.86. What I'm starting to wonder in very serious vein is the 5,600 level enough right now that maybe the market backs off, gets that ugly September month that we hear about so often. And then as you get into the latter part of October and November, you start coming alive again into the end of the year, as we so often see. I would think that's the pattern, but I can't say that I know that it's the pattern. So that's what I'm thinking is going to happen here. If you lose the embedded reading, then I think I'm on to something. That can be done, excuse me there, if the red line closes under 79. Until that occurs, the traders are still, in my opinion, buying the breaks, looking for the up market. But if it were me, I'd be lightening up rather dramatically through all this. In the NASDAQ, I've been expecting a decline, especially once you lost the embedded reading, and I'm going to walk you right to this. Here you go. Look at how the market slipped back right there. Do you agree? So You lost the embedded reading. The goal is to get to the closest main moving average, the right here in front of you, and this is what the market did. Went right to it, and you can see where it's at. It did exactly what I want. Now, before I get ahead of myself, we're going to have a special sale. I'm going to start you with that so you can see it, and I'll tell you all about it when I finish the charts. I've never done this one. It's a quarterly sale, so you're going to get, instead of all these my regular prices, we're slashing them for a 3-month period that you can get this. I'll talk to you about it in a moment. Let's go to the news, though. For tomorrow, you're going to get personal income spending and the PCE data that the Fed likes. They're forecasting income up 0.2 and spending is seen up 0.5. The August Chicago PMI index comes out. They're looking for a slight gain of 0.3 up to 45.6. University of Michigan final consumer sentiment comes out at 9 o'clock, and they're looking for 68 versus 67.8. The thing you got to be on the lookout for tomorrow, and I think it's going to be important, do traders just sort of turn off mentally after these reports come out and they're on their Labor Day holiday? I think that's what is going to happen, so be aware of that. If you fall down further in here, I look for support 19,166 to 19,310, but I'm not in the bull camp right now. I'm in the camp where the market needs to fall further down, so that's where I sit. In the Dow, I didn't want to lose that. You still have the embedded reading. It's the strongest temporarily of the indices. Still has the higher lows, higher highs. It had an outside day. Now let me walk you through this one because it's always good to see it. You had an outside day down on Wednesday. Today, Thursday, the market takes that out and it's making the higher high. Ideally, before the market takes out the low of Wednesday, it makes a run to the upper Bollinger Band. That would be what you look for in the market. You still have the embedded reading fully at work here, and here you are with the evening trade. When we get to the Russell, overbought market, uptrend. I think it'll have a lot of trouble here, and it's not even trying for these highs at this point. So you have to wonder, are we going into a mini correction that we start churning a little bit lower, or is the market going to be able to hold on here? I think tomorrow's going to be an important day in it. In the bonds and notes, they've all slipped back to the 18-day average of closes. Take a look at that. And the Bollinger Bands have narrowed in rather dramatically. So the market is waiting on the PCE tomorrow, but I really think it's going to be waiting on the jobs data next week. I mentioned that to you. I'm going to stick with it. That will determine, I think, to many traders, the Fed going a quarter, half point. In the dollar index, I've been looking for a rally. If you'll take a look, you lost the bearish embedded reading on the close. I think the pros came out of their shorts today. I think they're now neutral. You have a higher high, lower low pattern. In the euro, you had lost the embedded reading. Let me step back with you over here. I wish I could do that. It's moving the word stochastic because I moved something. But you had lost the reading back here, and I thought it would make a run to the 18-day average. It's already done that for me. The British pound, you're in the midst of trying to lose your embedded reading. Any close under 79 opens the door up then for this market to correct more, very possibly down towards the 130 level if it's lost. In Bitcoin, the trend is down, but again, you're fighting this important battle at the 200-day average and the 18. Sort of no man's land in the chart. If the pros are doing anything, they might be selling the 18-day average. I don't like the risk factor. It's going to be 61,580. And remember, later in September, we're going to get contracts that are 1/50th the size. So it's going to bring in retail traders like mad. They'll expire every 2 weeks. So what? A chart pattern's a chart pattern. If it gets good open interest, it's going to be a very popular contract. The key is, will the public take to it? When we look at crude, you have a big outside day to the upside, no follow through, sort of hanging around the 18-day average. Give your nod to the bulls for the moment. Higher lows and higher highs. Momentum still pointing sideways to higher. In the October WTI, you have a higher high. I guess you could mark this as the new low. I could even make an argument, higher lows, higher highs, just the way the other. In fact, that's what it should be. I just missed it. When we come over here to the heating oil, and it's heating oil, I'm dropping gasoline following now. We're going to be going into the winter months. This is where you start looking at this contract, in my opinion, more. You have the higher high, the lower low, no trend trade at this point. And in nat gas, it bottomed as far as I'm concerned 2 days ago over here. And now the question is, can it rally enough and get out of being oversold to sell short again? So as I told you, we're having a sale. And let me explain the sale because it's so simple and easy. My normal price for my full research, twice daily updates, free access to my special reports. The special reports will be coming back. I didn't want to do them this summer. I took off time for myself. They'll be coming back early September, and I'll go back to live webinars every now and then. That's all included in this price. Twice daily updates, Monday through Thursday, Friday a morning update, Sunday night an update, and special reports from me. Not just the ones I do on the video, but any updates to trades. When I put out, hey, do this at the market, do this right now, you get those from me. If you want just the videos that I do in the morning, instead of $84 for 3 months, a total of $49, and these are your total prices for this. And come on, this is not expensive. You're really going to get a lot. My videos are 15 to 18 minutes long, and I cover all the futures markets and all the important ETFs. And remember, you can write me a note. I will make a special chart for you and tell you what I'm seeing of the market if you're a paid subscriber. You can get 3 months of the futures only for $29. These are all good-sized savings. And instead of $48 for the Spider ETF by itself, $32. So how do you get all this? You'll see a cursor up here if you move your cursor. Otherwise, you just go to iraepstein.com. Look on the top left. You're going to see a green bar at the very top, says 3-month sale. Give it a click. You'll be right in there, and away you go. I'm Ira. You have yourself a great day, and I will talk to you all tomorrow morning. You take care.